Would you like a shortcut to successful property investing? Well, spoiler alert, there's no shortcut. But today, Brett Warren and I are going to discuss 12 things that would have made him an even better property investor if he knew them earlier in life. Welcome to another episode of the Michael Yardney Podcast, where we help investors gain clarity amongst all the confusion and the mixed messages in the media at the moment regarding property, so they can develop the financial freedom they're looking for. And we're going to be doing that today by giving you some clarity about lessons Brett and I would have liked to learn early in our investment career. So at the end of today's show, you'll have some hints, some tips, some things you should do, and some things you shouldn't waste your time on. Let's get on with the show.
Welcome to the Michael Yardney Podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Hi, Brett.
Hi, Michael. Good to be with you. Looking forward to unpacking some of these things. I know you've had 40 or 50 years experience in this space, so I think it'll be a really worthwhile discussion to understand how you would have become a better investor if you knew these 12 things. And the first thing, I guess, is there's a couple of important things.
Well, Brett, the idea of this chat with you today came around when one of my nephews suddenly took an interest in property and asked me, hey, you've been investing for a long time. If you could go back, what would you have liked to know that would make things different? Now, of course, that's a great question. And I know I've had a lot of regrets over the time, but I've seen you over a number of decades now, from an attendee at one of my workshops to becoming a client of Metropole, to becoming a buyer's agent, to becoming a property strategist, to being a partner and now a national director of the business. So let me turn the tables on you instead and actually ask you, Brett, what would you have liked to know better at the beginning of your journey? Now, this is putting me on the spot a bit because you were a client of Metropole and you were reading my books and blogs,
Yes.
But what would have sped things up? What would have helped you?
I think the first thing is to become the pilot of your life. So, if you jump in a car, you're either in the passenger seat or in the driver's seat. I think far too many of us kind of feel like we're in the passenger seat, right? It kind of, life happens to us. The government or interest rates or things happen to us, when in reality you're actually in the driver's seat. And everything changed for me once I learned that my thoughts led to my feelings led to my actions, and then my actions led to my results. This meant my inner world, I could really control things, and I had an opportunity to influence my life. And no matter what you do or who you are, there's a circle of control that you can control. There's other things like interest rates and government and life that kind of throw things at you, but you are still in control of your life, and you're still the pilot of your life. And once I understood that, and I started making just really small decisions and taking advantage of opportunities, my whole world changed.
And you know what? Even if it's not true, if you act differently and if you think differently, as you say, your results are better because you believe you're responsible for everything. Because I've never come across a rich pessimist, but optimists and people who feel in control are better. In fact, psychologists show us that the more we feel in control of various elements of our life, the better we are. So I think that was a really good point to start with. Become the pilot of your life. What else would you have liked to know at the beginning of your journey?
Stephen Covey said, begin with the end in mind. So actually understanding what it is you want to achieve. I was very lucky, Michael, because I grew up with a sporting background and we always had a goal to win a race or to win a premiership or something. So there was always that working towards a certain goal. And once I started directing those lessons into my life and I understood what my prize was and what I was working towards, it made a huge difference. I was able to reverse engineer and work towards that. You also taught me at some stage about the reticular activating system. And this is actually really scary. It's almost like your brain is like Facebook, Michael. I don't know if you've ever, talked about a boat or a new pair of shoes, and all of a sudden you scroll through Facebook and there's an ad.
Funny.
Yeah. So the reticular activating system, exactly the same. And if you can set your GPS and you can actually know where you're heading, then you make decisions in coordination and in information regards with that, rather than just kind of floating through life and hoping things kind of happen to you. So understanding the end goal and then directing your efforts and energies towards that was really, really important.
Well, interestingly, that's one of the reasons we spend a little bit of time talking about the reticular activating system at Wealth Retreat that we're conducting in May this year on the Gold Coast, where we're getting together with a small group of successful business people, entrepreneurs and investors. Hey, by the way, don't count yourself out. I'm not talking about you, Brett, but the people watching this or listening to this saying, I'm not already at that level yet. Because in fact, by understanding how the reticular activating system works and acts partly as a search engine, but also as a GPS, because if we set that right in the people at the beginning of Wealth Retreat, then they come in for the 5-day event with a whole lot of ideas, but they go out with some very firm plans, direct plan to get there. So that was a good point. Okay, we're looking through a number of things that you would have not like to know when you started to make yourself a better property investor now. And having said that, you're already in the top rung with the size of your portfolio, your substantial home, your business interests. But having said that, what else would you have liked to know earlier so I can tell my nephew next time I catch up with Brian?
Yeah, yeah. Definitely your attitude changes your reality. And, I think when I was younger and when I was inexperienced, if I had a setback, if something in life happened to me that was, untoward, it probably took me a while to kind of get over. And I was drew negativity. I was, emotional about it. It took me a long time to get over it, rather than just accepting it and I guess finding a solution or a way to move forward. And in some cases, there is not a way to move forward. It's just a matter of dwelling on it for a shorter period of time and then getting through, breaking through and moving on and accepting that those kinds of things are going to happen. So it took me a while to understand that your attitude really, I guess, can make and change your reality in the world. And I guess taking one of my favorite sayings is learning that everything happens for a reason, understanding that there's a silver lining there. And sometimes it might be a couple of years before you understand and it eventuates. But, I think the attitude is a big thing, Michael, and making sure you've got that attitude right.
There's an interesting theme coming around here. When I asked you what's going to make you a better property investor, I haven't heard anything about property data. I haven't heard anything about strategy. I haven't heard anything about location. And I guess that is the truth, that the big difference between that small group of people who build a very substantial portfolio that gives them lifetime wealth and intergenerational wealth, they think differently, don't they, Brett?
They certainly do. They certainly do. And there's a lot of detail around that. But you've got to have, you talk about a mindset and abundance mentality. And, we talk about the thermostat and being able to break through that. So I think that's really, really important. The other thing I learned, Michael, which is my fourth point, is, you must give to receive. Once I actually learnt the ability to actually help and influence others to achieve their goals, it was amazing how often I achieved my goals. And I actually greatly improved my self-confidence, my ability to work and get better results. So it's not only influencing your team, influencing your family, it's also giving back to the community. We did an amazing charity ball this year. We've raised tens of thousands of dollars for various charities with Metropole. And that's very, very rewarding for our team and to be part of that community. So giving is a form and giving in that form and receiving rather than expecting everything to come to you.
That's a good point. And in fact, I believe it's an obligation once you get to a level of wealth to give back to the community. There's nothing new about that. There's the concept of tithing in religion, that you've got to give 10% to charity. I'd also suggest you should be tithing 10% to yourself. That's a concept I learned many years ago. Spend 10% of your income on improving yourself. So over the years, I've been to many self-help seminars at the early stages with Tony Robbins, Chris Howard, Landmark. Pam and I learned a lot. In fact, I got the idea of rebuilding my life and building the Metropole Group from a 5-day event at Coolum up in Queensland that Brad Sugars ran, which was an entrepreneurial seminar that I know it cost Pam and me in the year 2000 around $10,000 each. I don't know what that'd be worth today, probably $40,000, $50,000. It was a huge investment in ourselves, but boy, has it actually repaid itself in many ways. And it was interestingly one of the reasons that many years ago in 2006, 2007, we put together Wealth Retreat with the concept that if that helped me by having an intensive, immersive experience, and it's changed my life and so many others, how could we help others do that? So one of the great things we do, sure, we get paid for it, but in fact, when you take account all the time and effort and put into it, there's other ways we could make more money, the dollar for hours spent for it, isn't there? But by giving back to others, it repays us in many ways.
Many ways, yeah, many ways. Financially, emotionally, absolutely.
Definitely. Okay, let's get back to your list of things that would have made you a better property investor if you knew them early in your life.
Yeah, I think number 5 is being proactive rather than reactive, and looking for things to happen. I've often heard you say, Michael, there's 3 types of people: the ones who make things happen, the ones who watch things happen, and the ones who think, "What the hell just happened?" So I think once I understood that I can actually make things happen, I changed my mindset, I improved my outlook, I adopted an abundance mentality. All of a sudden, these opportunities started coming up, and I took advantage of these really small little opportunities. I had a chance to move interstate when I was younger, and I did that. I had a chance to come on board with Metropole, and look at those little things along the way that are just really small decisions. If I had that closed mindset and was waiting for things to happen, that would never have happened. So I think being proactive and really looking outside of the box for opportunities is important.
Well, interestingly, there was also probably your reticular activating system working, because you said yourself you're a sports person. I know you and Abby set yourself goals financially, and then your reticular activating system found ways to do that. So being proactive, being positive is a great lesson. What else is on your list of lessons you'd like to have shared with your earlier life?
Yeah, I think when you're younger, I remember I'm on my mid-40s now. I remember thinking I'd never get to 30 or 40. It would never happen. But obviously time plays an amazing role, and it fast forwards things. And I think a lot of the clients we speak to, Michael, they're probably later in life. They're in that mid-40 bracket. They've woken up after having 2 or 3 kids, a little bit older, a little bit grayer, and now they realise they've probably got 15, 20 years to get this right. So you've really got to make time count, and you've really got to make the decision and take action when you're ready and when you're available. Otherwise, time's going to pass anyway. And I know that a lot of the successful people we have probably had a property or two. They've got a run or two on the board before they go through that phase. And property's like rolling a giant snowball down a hill. It's very, very, very slow starting, isn't it? So the sooner you can get that snowball rolling and start getting down that hill, the more compounding and leverage and the better situation you're going to be in. So people always ask when the right time is. The right time is when you're ready, when you've got the ability to do that. Don't wait. Whatever happens in the next year or two is not going to matter in 20 years' time. What's going to matter is you've made those really important decisions and you've got into a position regardless.
Well, that makes sense. So it's really the combination of compounding, leverage, and time that helps grow your wealth, feeds into that delayed gratification, just allow for it all to happen. That's right. I guess along the way, though, if you're like me, you made a share of mistakes. How did you cope with those?
That's a difficult one, isn't it? Nobody wants to make a mistake, and particularly in the sporting world, when we don't want to make mistakes in games, and it could cost things. But one thing we did really well in the sporting arena, and I don't think we do it well in business, we used to sit down at the end of each week. We'd get a tape sent to us about the good things we did and the bad things we did, and actually learn from it and understand that mistakes are part of every game, and you need to understand that a mistake is an opportunity to grow, an opportunity to get through and not make that mistake again. And it's something I've adopted in business as well. If we've made a good call or a bad call, actually assessing what went wrong and why it went wrong, and pinpointing the turning point, the decision you need to make, because you just get better and better at it. And then you become more successful and more wealthy because you've managed to eliminate those mistakes. And I think at a young age, it's actually quite difficult to do that, Michael. So I think one thing I did was hitch my wagon to someone like yourself who'd been doing it for 30 or 40 years. And I know, like you talked about, often mistakes that you've made. And I learned from a lot of the things you did, and I avoided a lot of the mistakes that I probably could have made. And I'm in a better position because of that.
Well, I think that's part of what we do when we put a strategic plan together for clients at Metropole. We tell them what to do, but we are aware of the landmines. We know what can go wrong. So therefore, we also advise them what not to do. And by having a strategic plan, by knowing what you should do, it stops you getting emotionally involved, being distracted by the white noise in the media, by doing the wrong things. And so again, be careful who you listen to and who you choose as a mentor, because at the moment, the strong growth we've had in particularly Perth, Adelaide, Brisbane has made a lot of new so-called gurus seem very smart, but I'd be suggesting that for some of them it would have just been luck, and they don't have the perspective to advise at this stage of the cycle. Anyway, mistakes mean growth if you do them correctly. What other lessons would you have liked to know earlier in your investment career, Brett?
Yeah, look, I guess, not having invested through multiple property cycles and understanding that they are just cycles and they're moments in time. Don't waste your time worrying. I think
Yes.
isn't there a statistic out there? 80% of things you worry about never happen anyway, so don't worry about it. But I think as an investor, particularly in the last 5 years, everything's looked good, but all of a sudden interest rates go up, or there's a vacancy rate issue, or something happens, and you really start to worry about it. And you start to think, well, geez, is this ever going to work? And am I better off just selling the property? It hasn't grown for 5 years. What do I do? So I think it's really understanding that things come in cycles. Don't spend your time worrying. A little routine I like to go through is actually go through the worst thing that could happen. So if I'm worrying about something, I'll actually go through the absolute worst thing that could happen and try and find a solution or a proposal to work through that. Then I'll also work through the best case scenario. And quite often you actually find it's in the middle, isn't it, Michael? Somewhere in the middle is where you're going to land. So, I think by doing that, it gives you a level of comfort, a fallback position. You've played it out in your mind, and now you can actually relax. You don't have to worry about it for the next 2 weeks. So spending time worrying can draw negative energy, can close your mindset, and that's probably the opposite of what we want to achieve when we're starting to create wealth and momentum.
Well, it's hard, isn't it? Because you shouldn't take things too seriously, because what seems like a big problem today may never even be an issue in 5 years' time. But remember all those fixed rate cliffs, the unemployment cliff, the mortgage cliff, all those concerns that people had. And while they were worrying about that, just the world moved on and the property markets moved on. So lighten up a bit. Any other thoughts? Any other lessons?
Look, I think one thing I did early on, and probably mid to midpoint as well, is really comparing myself to other people.
Yep.
I think particularly when you're coming through the ranks, I often hear you say, don't compare your page 40 to my page 70. People have had that longevity and that experience. And I guess the other thing that makes it even more difficult these days, Michael, is the Instagram reels and the Facebook reels on Facebook are the highlights, the boats and the cars and the beautiful people that they're working or living with. And, in reality, that's probably not happening. So there's probably a false sense there of what's actually happening, and in reality, it's not happening. And then for those people who it is happening for, they're generally more experienced, they've been in the game longer, and you've kind of got to do your apprenticeship and work through that phase. And that's something that it took me a while to understand, and jealousy plays a part in that, and wishing you were here, and
envy,
coming to terms with the hand that you've been dealt, but understanding that there is a way forward, and comparing yourself to others is really not a way to do it.
Well, it's really interesting. We mentioned Wealth Retreat a couple of times, and I've got a couple more questions I'd like to ask you in a moment about other lessons you'd like to teach yourself. But it made me think that when we get together with this group of already successful people there, they all leave their Superman capes at the front door, don't they? And there's no egos involved. There's no jealousy involved. Because once you get to a certain level, they've actually dropped that, just like you said. And so therefore, they're in the right environment to learn. And if you'd like to be in this group of people, I'd suggest you go to wealthretreat.com.au and express your interest. You can't book in, but what you should do is find out about it, have a chat with our team, and set aside the 3rd to the 7th of May to join us on the Gold Coast. Because a lot of the people who do come actually didn't have a mastermind group of like-minded people, of business people, with whom they could share their challenges, brainstorm their ideas, leverage their contacts. People that I've spoken to who came along and got so much benefit said they're looking for a group of ambitious, positive, like-minded, supportive doers to help them succeed. Having all those traits that you just mentioned, Brett, that's what made me think about this. And of course, it's not just money. When people come to Wealth Retreat, they recognize money is important, but just like you said, it's important in some areas and not in others. But they're looking for money plus time. True wealth is money plus time, plus health, plus freedom, plus meaning to enjoy your life. So we look at 5 areas of wealth at Wealth Retreat. Knowledge, we share high-end wealth creation, business, tax strategies. We give you systems. Obviously, we believe property is valuable in creating wealth, but we show you advanced wealth creation and business growth systems. We do spend quite a bit of time at the beginning talking about mindset, because this is critical. It's not a woo-woo seminar. We don't dance on tables and massage each other's shoulders. But in previous years, you remember yourself, Brett, in previous years, we expanded the delegates' wealth operating system, the way they think, so that then all of a sudden they were receptive to a whole raft of new concepts. And judging by the results, after seeing them, after coming to Wealth Retreat, it worked. Then they get the right network of people, and we also talk about contribution. So in summary, it's 5 days where you'll be with successful business people, entrepreneurs, investors who want to take their world to the next level. And the aim of Wealth Retreat is designing the next 5 years of your life. Go to wealthretreat.com.au. It's for people who want to build a true property investment business. And Brett and I'd love to have you join us there. And there is still, since it's in the early stages of discussing this, it's in May, but it always sells out. There's still the availability of some early bird specials as well. Now, Brett, you've gone through a whole lot of things, but I'd like to ask a couple more lessons you would have liked to know that would make you a better property investor and get to where you are a little bit quicker.
Yeah, look, we talked a little bit about the cycles of property investment and that they're getting shorter, the economy and things like that as well. I wish I understood that this moment is a moment in time. And, I guess the last decade prior to 2020, I mean, it was an area and a decade of no inflation, very, very, very low interest rates. And I guess it lulled investors into a false sense of security because all of a sudden interest rates shot up and things like that happen. But if you understand it's part of a cycle and that's going to change, and even at the moment with interest rates high, people think it's going to go on forever when it's likely not. But you and I talk on a regular basis, Michael, but we're never really concerned about interest rates or supply and demand or issues like that, because we actually understand that it's part of the cycle. Will we get through this part of the cycle? And at the end of the day, whatever's happening now, or if you're buying an asset now or it's up or down, it actually is not going to matter in 20 years' time anyway. So I think understanding that every cycle is very, very similar and speaking to people and talking and understanding those cycles is part of something I wish I knew earlier, because I guess it took a lot of the emotion out of those kinds of things.
Well, again, a lot of people who so-called advise on property have not been through the cycles. And I know a lot of people don't like it when the Melbourne market's been flat for a year or two. You've been through it when Brisbane, where you're based, was flat for quite a number of times. These market downturns are, in my words, a fee of admission into the property market rather than the fine for getting it wrong. It's just part of being in the cycle. A short-term fall in values is just the cost of being in the market. It's the cost of the long-term success, isn't it?
It absolutely is. Michael, I've got two more for you. The first one I used to focus on was more, and I know a lot of investors do, is cash flow, but I wish I knew the importance of compounding and talk about the eighth wonder of the world is compounding. And, I often speak to people about, maybe needing a $2 or $3 million property portfolio. And I ask them, even if I doubled your incomes today, you're going to be able to save that amount. And of course, the answer is no. But if you've got the right properties that are compounding and leveraging and growing at wealth producing rates of return, that's really, really important, because that's what's going to get you to that point. And once I actually understood that, I probably still didn't appreciate it, Michael, until I actually went through a full property cycle and understood that you can make substantial amounts of money by compounding and use your assets wisely. And I think it was Warren Buffett who said, to become wealthy, you've got to find ways of making money while you sleep. And I think, a lot of our clients, particularly in the northern markets, have done exceptionally well in the last couple of years, and they've made a way to find, I guess, money while they're sleeping. And I guess that's something I learned from an early age.
Great. Okay, one last one to share. What would have made you a better investor if you knew it a little bit earlier?
The last one is there's always an X factor. Something always comes out of the ground, doesn't it? We've talked about the recessions and the mining downturns and the credit crunches and the COVIDs. And, just when you think you got a handle on things, something will come out of left field. So one lesson you taught me was to expect, we don't make forecasts, we make expectations. We expect that there's going to be some kind of X factor, some kind of downturn at some stage, and we prepare for that rather than hoping it never happens and then it does. So I guess preparing for that X factor and understanding that not to leverage yourself to the max, having the ability to have a buffer in place and ride those times out is critically important.
Well, I guess in conclusion, we live in the best country in the world, and despite what some would suggest in the best time in history, so I got the message from you, it's important to appreciate and enjoy the journey, because if you're grateful for what you've got, you'll enjoy the end destination. Now, I hope that people watching this and listening to this have seen the depth of the information that you have shared, and none of it talked about, as I said earlier, on property or location. And that's why I'm happy, pleased, proud to have you as my business partner, and you've worked up the ranks of Metropole and look after the wealth strategists and the wealth planners and the buyer's agents, because you're bringing that other level of perspective, because as we keep saying, it's part art and part science. So the science is delivered through the data, but you also need this other perspective. So if people want to make 2025 the best year in property and want to take advantage of the first half that'll probably be a little bit quieter, just because interest rates are going to be high for a bit longer. There's going to be a federal election and there's always uncertainty at those times. But having been around the block a few times, I know both you and I believe this is the time to get all your ducks in a row and get in, because when interest rates fall and FOMO is going to kick in again the second half of the year, and that's going to come around sooner than we think, is going to see the market have another wave of enthusiasm. So if you're keen to get the depth of Brett's knowledge, go to metropole.com.au. Our team are much more than buyer's agents. We help our clients safely grow, protect, and pass on their wealth by giving strategic property and wealth advice. And of course, we're happy to act as your buyer's agent to implement the plan, but it all starts by helping you plan to become the person you plan to become. Thanks for your time, Brett. Look forward to catching up with you again next week.
Thanks, Michael. Good to be with you again.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I want to ask you a question. How much are you worth? Actually, I want to start by sharing a story with you and you'll get what I'm on about. I read this story about one day when a boy approached his father and he asked, "What's my life worth?" The father handed the boy a small stone and replied, "Take this stone to the market. If anyone asks the price, just raise two fingers and don't say anything." So the boy did as he was told. He went to the market and an old woman approached him and asked, "How much is that rock? I want it for my garden." And the boy held up two fingers, to which the woman replied, "Oh, $2, I'll take it." Before she could complete the deal, the boy turned around and ran home to tell his father what had happened. The father nodded and said, "Okay, now take the stone to the museum. If anyone asks the price, raise two fingers and don't say anything." The boy did as he was told, went to the museum, and a man in a suit approached him and asked, "How much is that stone? I want it for my home." And the boy held up two fingers, to which the man replied, $200, I'll take it. But before he could complete the deal, the boy turned round, ran home to tell his father what happened. The father nodded and said, "Okay, now take the stone to a precious gem store. If the owner asks the price, raise two fingers and don't say anything." The boy did as he was told again, went to the stone store, and the owner of the store approached him and said, "Where did you find that rare stone? I've been looking for one of those my entire life. How much will you sell it for?" So the boy held up two fingers, to which the man replied, $20,000, I'll take it. But once again, before he could complete the deal, the boy turned and ran home to tell his father what happened. Okay, what's the lesson of this story? I actually think it's a powerful one. I guess the lesson is you can choose your own worth. You can determine your value. Worth isn't fixed, it's dynamic. I guess it's environmentally dependent, isn't it? So just as a stone could be a $2 rock in the market or a $20,000 stone in a precious gem store, you too can see your worth change with your environment. You can choose to place yourself in an environment where you're poorly valued, surrounded by people who don't think much of you, tell you your limits, laugh at your ambitions, who criticize you. Or you can choose to think of yourself as limited, static. You can be hard on yourself, lamenting your failures and missteps. You can tell yourself your future is set. Or you can choose to place yourself in an environment where you're highly valued, surrounded by people who lift you up, who encourage you to think bigger, who will pay you what you believe you're worth, and they give you support. They'll believe in you, even when you don't believe in yourself. So you can choose to think about yourself as unlimited and dynamic, or, as I said at the beginning, limited. You can hold yourself to a higher standard and view every failure as an opportunity just to learn and to change. You can set the boundaries. You can tell yourself that your future is in your control. Oh, by the way, that's one of the themes of my many weekly mindset messages, isn't it? You are in control of your future. You should be the pilot of your life, not just a passenger being travelled along. So you get to choose your own worth. You can choose to place yourself in an environment where people will see you for your highest potential. You can choose how you treat yourself. You can choose your own value. So you get to choose, as I said, whether you're a $2,000 rare stone or a $2 rock. I believe this is actually one of the most important choices you have in your life. So choose wisely. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?